Welcome to episode 105. Very excited to have Mandy Cole with us today. Mandy, how you doing?
I'm great, Randy. Thanks so much for having me.
Absolutely, great to have you. You sure you know what you're getting into here?
I don't, but I'm ready, or I'm as ready as I'm going to be.
All right, there you go. Well, you'll find Mandy has a very impressive background. Currently, a partner at Stage Two Capital. Full disclosure, I am a LP as well, an investor, and very happy. Certainly, a great group and great companies that they're part of. Today, our title topic is 2023 planning benchmarks you should be using for growth in the current market. So certainly a lot different than it was a year ago. And we have as our sponsor Sales Bricks. They are also the CPQ sponsor of Sales Community. So think config, price, quoting. And I know when I was on the operating side, Mandy, when you're on the operating side, and certainly for lots of friends, getting the configs done take forever, get the pricing done takes forever, get the quotes done. Then you have the whole collection process. So Sales Bricks really has an awesome niche, and we'll talk a little bit more later about them. And then coincidentally, full disclosure, I also invested in Sales Bricks before Stage 2 got involved with them, but I'm not biased at all, of course. And we're also brought to you by Sales Community. So for those that are already members, thank you very much. If you are not, you can go to salescommunity.com, and in the upper left-hand corner, you'll see a tab where you can pay to join, or you can do winter free. I'd strongly recommend you do the winter free one as well. So Mandy lives in Marin County, which is a cool outdoorsy area. Enjoys hiking, cooking, reading. Her three kids, 7, 10, and 17. And we're just trading notes on a cool holiday trip that she's going to be taking. And full disclosure, we really don't know each other that well. We met through Stage 2 Capital probably in the last year and a half, but definitely have always been very impressed with her materials, for reaching out for help, how she helps companies. And I know for sure Sales Bricks really appreciates the help that you've provided there as well. And speaking of which, we have a couple intro comments that I got. So from John Festeo, who's the Sales Bricks CEO and founder, says, we owe a lot to Mandy as she selected us to be part of the Stage 2 Capital Accelerator program. Mandy has been an amazing resource for Sales Bricks in many ways, including finding customers, so certainly an important one. And the legendary Mark Roberge, longtime HubSpot exec, I call him the godfather of PLG and Stage 2 founder. Mark says about Mandy, she has seen the insides of more Silicon Valley tech sales teams than most people on the planet, and over the last 5 years has codified her observations into frameworks that help the next generation of entrepreneurs embrace modern best practices and avoid the mistakes made by their predecessors. So that's about as good as you can get.
I know. Wow. I need to put that as my line on LinkedIn.
There you go. So if we let's jump into questions so we can help the audience learn from some of your incredible insights. So maybe we'll start with your professional background. Maybe I know after UNC, your first job was as a sales rep at City Search. So maybe kind of start there a little bit about that first job experience, and then however you want to go through your professional background.
Great. Yes. The first job was interesting because I didn't, like most people, I think, that get into sales. It's like I went to school and graduated with a sales degree or a growth degree. I didn't really know what I wanted to do. And a friend of mine from school called me and said, hey, there's this company, they just started and they're looking for people to sell. And I'm going to completely date myself here, Randy, but this is like in the late 90s, this thing on the internet to businesses. And so I went, and for those of you that don't know what City Search is, it was like the Yelp of its time. Fortunately, we didn't keep up with the times, and then Yelp overtook us. But so it was, my first job was actually selling websites to small businesses in 1997 and going door to door and trying to explain to people what the World Wide Web was. And I remember also when I took this job, my dad, who I love dearly and has been a mentor to me. But at that time, this is when people were first getting AOL dial-up accounts, and I went and I said, "Hey, this is what I want to do." And he said, "What? Who's going to look on the internet for like a restaurant? I don't know that that's ever going to work." But he liked it when we went public. He made a little friends and family money. So, but that was it. It was like door to door SMB sales.
Excellent, hardcore. And then what about kind of your progression from there?
And then from there, I was with City Search for 5 years. I was really fortunate, as I'm sure a lot of folks that are watching this, one of the things and one of the reasons why I probably stayed in tech and startups is I joined them when we were the first sales teams. They were Series A company, and this is back before at the beginning of a lot of this, and I was able to grow. I was mentored directly by the VP of sales, which was an amazing experience, and then was able to move out to San Francisco, open this market. And then I joined a team where I opened new markets for 2 years. So I lived in 15 different cities in the US, became a manager, then ran the Atlanta market by the time I was 26. So it was such an education. I remember applying to business school at that time, and I went to an interview at UCLA, and she said, "Why do you want to go to business school? Everyone that's applying to this school wants your job. What are you doing?" It's like something I just hadn't thought about, and like what an amazing experience that was. And, so from that, I think that's where I really, after City Search, I did go to Wells Fargo for 5 years, and I was running payment processing teams because I felt like I needed to go to a company that had some structure and some frameworks. And we were a lot of, not that we didn't have some of that, but at a startup you're continuing to evolve and invent. And that was long enough for me. I realized that a big established company isn't my passion, and it's not probably where my skill set was. So I went back early stage, joined a company at Series A, built a sales team from 0 to 60 people. And we built that company this is my new place, from 0 to 20 million, sold it to RealPage. And then from there was at Living Social, and Selling Dot, Main Street Hub, and then Zenefit. So all in all, I worked when I was in-house directly for 5 founders, scaled companies. City Living Social is probably the biggest, 800 million in revenue, big teams. And then I had my own firm for 5 years before I joined Stage 2. But going back early stage, helping companies at seed and A, because I found, again, that's my passion. Is I had to figure out a lot of things. In fact, that's how Mark and I met. Mark was, early days HubSpot, and I was Living Social. We got connected through a mutual friend who was like, "You guys are both trying to do the same thing. Like, you've got to scale these teams." And there was really nothing out there then to help you, and resources. And so we would bounce things off each other. But all the things that I learned then, and after doing it several times, are where I feel like, helping businesses that are trying to initially scale, if I can help them avoid a lot of the mistakes I made in-house, then that's a win for everybody.
Yeah, that's great. So certainly lots of great experiences, I'm sure, to Stage 2 and those companies. So I think the funds I've invested in, I think there's a $80 million fund 2 that was 2020 or so, and then recently closed a fund 3, which is $150 million. So certainly impressive there. Maybe tell us about some of your work with Stage 2. Kind of what do you do?
Yeah. So it's interesting. A couple of things that are unique about Stage 2, because we are a go-to-market focused firm. The fund, as you mentioned, Randy, and I know you know this, is not just, a lot of funds are backed by a lot of institutional investors, and we certainly do have an institutional investor. MIT is our institutional, but over half the fund is from go-to-market executives, which is such a amazing resource to have. It's probably the thing that companies, when we talk to them, are most excited about, because they know that they need help. I mean, the companies that we're talking to that are the right fit for us anyway are like, "Great, I now need to scale this." And I'm a product guy, I'm a tech guy, I don't know anything about go to market, but I see all these people on your site that have done amazing things. And if I can tap into those resources. And so we're so fortunate that our LPs we can have that resource, and that, folks like you, Randy, are able to, from a network to hire, to just jumping on a call with a founder, to even being advisors, and also a lot of cases customers. It's such a unique resource. So that's one thing that's exciting about what we do. The second is in our partnership, we have 6 partners, and we're half and half. So half of the partners come from a traditional investing background. The other half of us, Mark, myself, and Liz, come from go-to-market. So we were in-house operators. And in many cases, when founders are, again, talking to funds, trying to figure out who's the right person, investor partner to have on their cap table, there's a lot of funds that are one or the other, and they have to choose. And with us, they get both an investor, because we work as a team. So Ani, my partner, and I work together with our portfolio companies. And so now what we do is everything from, we have, several conversations a week with brand new companies. So we're both actively talking to companies who are investing or even not investing yet. But, to diligence and bring into the potentially bring it as a portfolio company. And then on the flip side of that, we also work with our portfolio companies. So once we do invest in a company, where a lot of the frameworks that we're sharing publicly, we actively work with them to implement. We do a bottoms up model, get a realistic plan in place, figure out what your leading indicators are that we're going to focus on measuring for unit economics and retention. And that's how we can measure the health of the business monthly. We help them set up their monthly reporting. We help them with identifying their team and the key roles that they need. We help them hire those roles. And then we've been really busy this month doing 2023 planning. In some cases, we actually built bottoms up models for our companies. So it's, and then as they're continuing to, once we get some of those in place, as they continue to evolve and they do have specific questions, that's when we can leverage folks like you and our LP network to say, well, let's go get 3 people that have been doing that, and they can share their insight with you.
Yeah. Great. And we have from Vincent Paul a nice comment. This is already getting insightful. What a journey, Mandy. So for those that are watching or listening, you can obviously see or hear us. We cannot see or hear you. But if you'd like to post any comments or questions, we definitely encourage it. And we've got Tucker behind the scenes, who always does a great job helping there. And then another facet of stage 2 then is the accelerator fund, which goes after helping much earlier stage companies from a profile perspective. So maybe use SalesBricks as an example. Kind of, maybe how'd you find out about them? Why do you like them? How do you help?
Yeah, great question. So with our accelerator, the reason we started that is we do get a lot of companies approach us, either from our relationships with other funds, directly from our sites. Certainly our LPs are out talking to folks, but they're just too early for us. They just got a product in market. They don't really have any traction yet, but they still have a lot of the same questions of, who should my first hire be? What is the profile of that person? How do I create a demand gen channel? What's the right demand gen channel for me? So we created the accelerator so that we could help companies that were earlier stage than we normally work with, and start to give them access to a lot of the same content that we give that we work with our portfolio companies on in the stage 2 fund. So it's a pretty intensive program. It's 10 weeks. Each week we focus on a different topic. They do have a coach that's with them from the accelerator fund. So the accelerator fund, the investors that are investing in that also get actively involved with those companies, not only through the accelerator, but even post accelerator. They've got a coach that works with them the whole time. They get mentors. With the program, not only is there a class either taught by me, Mark, or Liz each week, there's frameworks that they're given. They work with their mentor. And then we also have LP fireside chats from our LPs in stage 2 on that same topic. So they come out of that class with a full-on go-to-market strategy, a plan. We're talking from identifying your ICP to building a bottoms-up model to having, all of the tools that they need to now focus. And then the last day, they do get to share their plan, their go-to-market strategy. It's our version of a demo day. I think in our first one this past year, we had over 40 different investors attend that. So that's part of it too, is just giving them exposure to those other investor potential partners.
Great. Win-win all around. The company, stage two, and your other venture capital friends. So, speaking of 2023 planning, so our title topic is 2023 planning benchmarks you should be using for growth in the current market. So, maybe tell us more about that.
Yes. So again, yes, what we've been a
Brief,
little
just high level brief. We can't get too deep.
dear and dear. I think the biggest thing, and I know you've seen this too, Randy, is just what a difference from last year, right? I feel like when planning last year, so much of it was just growth. There wasn't as much focus on, the efficiency of that, right? Like what really is my CAC payback? How much am I spending on sales and marketing as a percentage of my revenue? Um, how much runway do I have left? Because at that time, I mean, you could raise money. Money was almost free, right? So nobody really cared
Right.
about how much runway they had left. It was more about top line growth. And especially if you thought you could just show over time that was going to even out, like it didn't matter that you were spending maybe 50% of your sales and marketing to get that dollar.
Right.
People were doing it. And now, given the economy, what we've really seen is from an investor perspective, we're much more focused on efficiency, right? We want to see that people are being smart about their growth, that they're focused first on, how do I make my current customers successful and make sure I'm growing them versus just throwing more into the portfolio or into their customer base. So looking at, their net revenue retention, are they spending their money efficiently, that they're not spending more than 30% on sales and marketing, to bring in that revenue. So things like that are really very much a focus, and when we're looking at folks' plans this year.
Oh, great. And then I think you've got a link that you can share with us maybe after that has kind of a bunch of that as well, correct?
Yes. So to help our portfolio companies, we put together because we found that they sometimes people are having a little bit of a challenge thinking about like, where do I want to end the year? And then let me use my model to make sure that that works. And then let me think through what are the key things I need to measure to keep on track.
Right.
We have a go-to-market plan overview PowerPoint that is a template that they were able to go in and fill and help them through that. We're going to be releasing it out later this week, but I'll share it with this community first.
Awesome. Great. And then that's also maybe a precursor to a book, maybe you said you're working on?
Well, yeah. So I also teach a class called the Definitive Guide to Revenue Leadership with my co-coach, Pete Crosby, who's a legend in the UK and has, a 4-time exit go-to-market leader. And so out of our class, because we've gotten such great feedback, I think we've taught it 3 times now, we're creating it into more of an actionable book, and very much using both the frameworks that we both have created, but also stories of other go-to-market leaders. That's one of the things that we found is that people are, I know that's one thing that's helped me, and
Yeah.
Vince, exactly what you said is learning, having people share like, hey, this is what I did, or this is what I wish I'd done even.
Yeah. It's good. And not that it's cheating filling a book, but I also in mine, Tucker, maybe you could put the link up, but I've got kind of 90 CRO friends that have kind of different tips and tricks and best practices as well. So it's a good way to fill pages, but you'll find, be careful what you ask for because you might get it, but then it's definitely a lot more work than you ever you ever think for sure. But I am sure it will be fantastic. Absolutely. And then on the 2023 planning, so do you find is profitability kind of more on the concept on the radar now than it was a year ago, or is it still more just kind of runway?
I think it depends on the stage of where the company is. One of the things that we've told folks is you want to think about right now, like being able to see a world where either you have 24 months of runway or you could be cash flow positive and be profitable if you needed to be, because we don't know what will happen. And it could be, maybe it's easier to raise in a year, but it might not be. And so for companies to be able to think about, if I needed to do that, what would that look like? And that's where, and it's interesting because it's not just, we've overhired, not even just earlier stage, but we've all seen obviously layoffs happening at larger companies too, because there was overhiring and or potentially people maybe not focused on what really is our go-to-market strategy, what's really the right demand channel. And now we're having to be, I think companies have to be more thoughtful about how they're really using their money.
Yeah. So speaking of which, so what advice do you have for those that have been impacted by recent layoffs in tech sales?
Yeah, because I know that that is happening. I think the good thing is that there's still there while layoffs have been going on, I think people are still. I'm still hearing that, in fact, several of our companies are still planning on hiring in Q1 for sales. So I think right now we're just going through this lull of people revisiting their plan, making sure that it makes sense. But the reality is, you still need to bring in revenue, and so folks are still going to need salespeople. And so looking at, I feel like we're going to see more folks hiring in Q1. And then, all the things that used to work. And I was curious, I was going to ask you if you've seen things, especially in the community, people talking about it, but, networking, certainly being active on LinkedIn, using communities like this, to reach out and learn more about other companies. Um, Doing all those things now is going to help you have more connections in Q1.
I also see, and this may be a bit crass to mention, but I think people took the, if you want to call it a downturn, the opportunity just to kind of up level. So there's a lot of probably performance management that should have been done. And my general observation is, people are just sloppy when it comes to performance management, when it comes to giving feedback, getting feedback, and then just a lot of just basic sales skills. Matter of fact, I do a weekly. I might be old school, but and it's all around sales skills becoming sloppy compared to what they used to be. And as of this morning, I think they're 90% were in agreement, 10% were kind of disagreed. But I think it just comes into the whole thing. So I usually will always suggest to people that have been impacted to say, yeah, it could just be random. They had to randomly cut, but chances are they cut you versus somebody else because of you. So, while it's fresh in their mind, if you can, in a nice way, circle back and say, hey, I'd appreciate any feedback. What is it that I can do different or better, kind of from a developmental perspective? And, sometimes it may be hard to do because of HR or whatever else, but kind of, if you have been impacted, take the opportunity to go, get the feedback to figure out what is it that you can do different or better. What do you need to do to become an A player? What do you think?
I love it. In fact, I know right before this, you were talking about a bunch of questions. One of them, and I get asked this all the time, right, is like, what is some of the best advice you've gotten or that you would give people? And
Yeah.
two things I always tell people that I feel like have helped me be successful outside of, in some cases, luck, is one, always asking for feedback. I mean, I'll even back to my city search story, my first VP of sales, like I was like probably annoyed the shit out of him. I was like, what could I have done better on that call? What could I, he's like, well, let's talk about what you did well. And I just constantly, and one of my mentors who now is also in VC or was Jeremy Liu used to always say, look, feedback's a gift. You should be
Right.
like, somebody actually wants to invest in you enough to give you feedback instead of putting that aside, like really take that to heart. And I think
Yep.
that that's always helped me think about what could I be doing to get better. The second thing, and I've seen this throughout my career. You probably have too, but it's certainly kind of what you were just talking about. I think the last 2 years got even more, I guess, I don't know if it's popular is the right word, but what's happening is if you're in sales, you have to talk to a customer and you have to do the work. And I would see folks like leaving, like, oh, but I'm getting recruited for this company and they are going to pay me $3,000 more in my base and I can make all this money. And it's like, and they said that they're going to have, it's all inbound leads and it's all this. And it's like, people are always looking for like this, you know,
Shortcut.
arrow shortcut of like being in a sales job where you're going to make 300,000 for doing nothing. And I'm here to tell you that that does not exist. Like, my best salespeople are always the ones that were better at, even if they had an SDR, and I did this, a long time ago, well, we didn't have stores then, but like they still prospect their own accounts. They're the best at discovery. They're really good at, at really understanding what their customer needs and matching that and continuing, but they also just continue to improve themselves too. Like you said, figuring out what could I be doing better. And that's those folks are the folks that end up really making a great career in sales, not the ones that, it's the job. If you keep moving every 8 months, you're never going to really have a great career in sales.
Totally. When I was a exec at HP, I'd go on sales calls and I'd say, do you have any feedback for me? And they'd be, shocked and, I have to get used to it. And I'd say, well, they may or may not have some for me, what I could do different or better. And I'd say, can I give you some feedback? So just by the virtue of saying, can I give you some feedback? People kind of open up, they're warmer about it. They're ready to be receptive. Then eventually it got to a point where, okay, Randy's going to do this, Randy's doing this, so everybody else should do it. Then we do these sales kickoffs, and I would kind of role play and I say, okay, everybody, turn to somebody to your right, and then say, hey, can I give you some feedback? And then just kind of just role play, but just kind of that, just culturally, doing that does make people get better. And then, not that it's the only thing, but certainly can avoid the risk of potentially getting laid off or cut. So we can talk about that all day too, but let's move on. What about advice for people breaking into tech sales?
I feel it's probably very similar, right? So I'd say, first of all, go somewhere where if you want to be in tech sales where you're going to actually learn and they're going to invest in you as a person. In a lot of cases, I know nowadays it's starting as an SDR, but go somewhere where it's actually, we're going to teach you, we coach, we use, it's not hey, we're going to throw you on the phones for 3 months. And then if you're doing well, we'll, put you out in the field. Even though that sounds enticing and it sounds great, I promise you learning the actual skills is you take that with you wherever you go. Like go somewhere where they're going to invest in you, where they're coaching, where you've got a sales leader that you respect, that you feel like you could learn from, and that it's a product you're passionate about. It's so much easier to be excited about learning and growing when you understand the product, especially from the customer's perspective. Like, what are you actually solving for that customer, and can you get behind that? Can you have conversations about that? Because that's when that's going to show through on calls, and it's going to make you a better salesperson, from everything from prospecting to discovery to actually working with that company.
Totally. It's really being a student of the game, right? So it's not, people say, oh, they're born with it or whatever, but those I think that are the best are students. They'll study, they kind of are sponges from people, from books, from everything else that exists. So before you're talking about teaching, so you do a class, I think, with Sales Impact Academy. There you go. With Sales Impact Academy on leadership. So maybe first tell us about Sales Impact Academy, since that could be a great resource to several people watching this.
Yeah. So Sales Impact Academy is a school for all sales roles. And they really started with SDR and AE are the primary roles, but they do have some classes now for leadership, for CS, and for RevOps. And one of the things, I actually started working with them before, so we did invest in them at stage 2, but I was already working with them beforehand. I had always felt like and try to share it one-off whenever people ask me about questions about leadership or how to do something. And my co-coach, Pete Crosby, who I just mentioned earlier, is in the UK. He and I have both felt the same way. Like, gosh, we wish there was a way where we could just teach people, and we wish there was a class we had gone to, or somebody said, look, here's how to do planning the right way. Here's how to actually hire people the right way. Here's how to manage people. Here's how do you set your people up for success? How do you deal with certain things that are happening? And so that's what we put together. But for Sales Impact Academy itself, one of the things when I put on my operator hat, I know that in my own organizations, career paths are really important for me because I wanted people to be able to come in and feel like, okay, we could map back to like, what does success look as an SDR? What do you have to master before you could become an AE? Because that's going to be important. What do you need to do to become a senior AE? But we had to do all this stuff in-house ourselves. And, pulling in content and having an enablement team do that. And what SIA does is comes to you with this and says, hey, you want your SDRs to learn these 5 or 6 skills? Great. Boom, here are the classes that we have, by the way, taught by people that are usually really good at that. So you're getting them taught by experts, and then they take a and then they get certified at the end of that class. So as a revenue leader, you're developing your people, you're giving them the opportunities that I just mentioned that people should go to.
Yeah.
But you're not having to build all that in-house. You're actually getting it from somebody that's already done probably better than you would hire in-house anyway. So it's such an amazing resource.
Yeah, I don't know if it's a good analogy. I think of them as a kind of Peloton app for sales training.
Mm-hmm.
So
it's a great way to
live. You can do some live. You can do some recording. So anyway, so as a reminder here, anybody watching along, feel free to ask any questions or make any comments as well. So moving on, I know you're passionate about several things, but you've got a point of view on how to improve revenue in the current environment, and you say it's not more pipeline.
Right. So going back to our growth at all costs, not a thing anymore. It really is about, first start with your current customers and making sure like who is a fit for our product. Are there opportunities to grow? I was right before this call talking to a portfolio company where that's what they just did. They went and looked at, okay, we've already signed up 90 customers, and they identified that half of them were really the right fit for them to think about growth opportunities, but putting a growth plan in place there, and then making sure that you are focused on, from the new customer perspective, bringing people in that look like that, and also thinking about people that are the right targets for now, right? As we think about in the same way that folks had to pivot at the beginning of 2020 because restaurants are closing. So you weren't going to go sell to restaurants, most likely. You also want to think about, can you sell into verticals that are more resistant right now, who potentially aren't thinking about cutting spend, and depending on what your focus is. But and also, how is your value prop right now? Because the value prop of, a lot of people are looking for more efficiency. They're looking to do more with less. So do you have a value prop that fits the way people are thinking about running their business next year versus, hey, we're going to help you grow 4 or 5 times revenue? That might not be the value prop that folks are thinking about now.
Yeah, I mean, speaking of value, I think when times are tight, the CFO is probably a lot more involved in the decision-making process. And I always like to say, okay, so if you're going to bump into the CFO in the elevator and you have 15 seconds, what are you going to say? It's not a bunch of technical gobbledygook. It's going to be how you're going to help them generate revenue, how you're going to help them save money, how you're going to help them stay out of jail if it's a compliance solution. But it's really kind of a handful of specific market share and some other things that go along with revenue. But it's really how are you going to help in those areas. And if your solution does not help identify that, it's a much tougher sales process these days, right?
Yeah, I mean, I'll give you an example of one of our portfolio companies, Meaningful Gigs. They are a talent marketplace for designers. What's unique about them is the design talent that that is on their platform are folks from Africa. So it's a very unique design skill set that a lot of companies, and they sell to enterprise companies in the US, are looking for. But 2 years ago, the value prop was, hey, you can't find enough people. You can't hire fast enough. We've got this unique talent. It's a lot easier. And you've got this project that comes up, rather than trying to go through an agency, you can get somebody onboarded in 2 minutes. So then it was all about speed, and the cost, even though it probably is a little bit less in some cases, that really wasn't a thing. Now it's more about, hey, a lot of these folks are, because people don't want as many full-time employees, it's you can now we're your outsourced team. You don't have to have those people on your, that you're paying benefits for.
Right.
You can leverage us. It's better quality at a better price. So a very different value prop than where, and they're seeing a lot of success with that value prop now resonating to the same decision maker. But you're right, because the mindset has changed.
Yeah, and even think of sales bricks, right? So if the high level value prop is, sales teams can sell, I'll make it up, twice as fast, and therefore sell twice as much, because then they can kind of cover more ground because the config price quote isn't taking as long. What's efficiency for that? I would think huge.
Exactly.
What are some examples of sales leaders that you respect?
Well, it's tough now that I work with him, because I used to always say Mark, because I've known him for so long.
You still can.
I know. So I will still say him, but it always, like, now that, he's one of our partners and our founding partner, I promise not kissing up to you, Mark. That's what I used to say before I was at stage 2. So Mark is somebody that I really respect. We have a lot of LPs that it's been interesting to start seeing as they're talking to our customers, starting to see some of the things that they're helping them with, has been interesting for me, because I haven't, for the past 2 years, or now plus, I guess, 7 years total, I haven't been an in-house operator. So seeing how some of those things have been changing has been great, as part of the stage 2 community.
Awesome. And I know you're kind of I'll call it your template or boilerplate. There's a lot of things that you go after. But speaking of Mark, maybe talk about maybe some of the confusion that you see with companies in the kind of, I'll say confusing PLG and enterprise.
Yeah. So on the PLG side, one of the things that we're, or are you saying some of the things that we're seeing? Sorry, I just want to make sure I understand the question.
Yeah, just in general, just kind of the PLG motion and how that relates to, kind of the enterprise and different solutions, because I know a lot of times people get confused.
Yes. So a lot of our companies are PLG, which means, that they're basically, in a lot of cases, offering a freemium product, and finding folks that come in, sign up, and then at some point they're either gated, either they self-serve into upselling themselves, and or the company reaches out and says, hey, it looks like you've got 4 people using this. So we've got a lot of companies doing that and really helping them think through that, especially depending on who they're focused on. If their prospect is somebody, for one of the things, and Mark has a checklist on our site, if you go on, but one of the things that we talk about is, who's actually the user and the decision maker, because it's the user in a PLG motion that typically finds you. But you have to make sure that user is somebody that would be searching for this, and then and that you offer something that would be interesting for them to use. In some cases, we have companies it doesn't really make sense. So I'll give you an example. It's one of the companies. It's a company called Percent Pledge, and they're one of our portfolio companies, and they're a platform to help companies facilitate both giving and volunteering. So helping companies give their time. There's a whole bunch of administrative crap behind the scenes. It's hard for folks, and they actually do all that for them. And they have been testing PLG. One of the challenges is that they typically sell to, when they're making that decision, it's an HR user, but it's a CFO a lot of the times, that is, because it is part of the budget, deciding, yep, this is what we're working on. And they're not typically looking at, is there a giving platform we could use instead of administering our program, So,
Right.
and there isn't a natural, we're going to come on. So they have been, at least for the HR person, they do have a way that they can run one thing, and they're testing that, but that might not be as relevant. They might find that they're just more of an enterprise sell, and that's the way it should run, rather than a company that has been focused on, hey, my end user is a developer, and developers are looking for, X, Y, and Z. That's how they're finding us in content. And then they start using the freemium product. And then once they want to upload their own data, or they want to do something, that's when they actually have to pay.
True. exactly. Good. So you get a foot in the door, and then you kind of ups depending upon the offering, of course, but then upsell from there.
Yeah, so it really is about thinking about the use case. I mean,
Yeah.
there's there's so many. PLG has been a hot word, and it's certainly, as sales continue to change, and people get more and more immune to getting email messages, and we're thinking about like how are SDRs, what is the best use case for an SDR even, versus an AE actually reaching out and managing that book of business supported by ABM, account-based marketing. I think there's
Right.
a lot of evolution that's happening there. But one of the things that we encourage companies is let's really make sure there's a use case for PLG before we test it. Because again, if your user isn't the person that's going to be finding this online and it's something that would be beneficial for them, then it doesn't make sense to spend a lot of time there.
Great. What about any mentors that you've had along the way and advice that you've received?
Yeah. I've been fortunate to work for some great mentors in both the founders and my companies, as well as, originally when I was at City Search, I remember the first time I didn't get promoted. I was up for a manager role against a peer of mine who I thought was great. I had been in my role longer, so of course I kind of took well, I've been doing this longer, I'm sure I'm going to get promoted. And at the time, my manager was Jeremy Liu, who has been a partner at Lightspeed for a long time now, but was at City Search, and he didn't promote me. And he gave me the feedback that, and it's feedback that I needed to hear of, hey, number one, like just the way you do it doesn't mean everybody should do it that way. And how many like first time, sales managers do we see doing it that, right? Like,
Yeah.
this is how I sell. You should sell the exact way too. Like, you've got to learn actually to separate methodology and be able to coach people. And number two, like, think about not just what's best for the salesperson, but actually what's best for the customer first, because whatever's best for the customer should be best for the company and for us.
Right.
So some great feedback. And then since then, he's been a mentor to me throughout my career, along with a lot of my VPs and founders like Tim O'Shaughnessy at Living Social. And so I've been fortunate to have that.
Awesome. That's great. What about if there's one or two things of advice that you would give your younger self?
Advice I would give my younger self. So one thing I think is make sure that you do, especially as first of all, make sure a lot of times in sales, people think like, and then I want to be a manager. And that isn't necessarily the right career path for a lot of people.
Right.
You're usually making less money and spending and spending a lot more time doing other things. So first of all, like, make sure that you're really thinking about what do you love to do every day and what role do you get to do that in? Because there's a lot of other options around that. And then once you figure out what you want to do, seek out mentors, seek out ways, continue to educate yourself so that you can get there. Whatever you do, make sure that you're using a data-driven approach to it. It's really easy for us to make emotional decisions, but the reality is that data all day long is it's sitting right in front of you, and it's going to tell you what you should be doing. So I wish, when I was younger, I probably was too emotional. I made some emotional decisions. I probably even did that in, thinking about my next job versus really thinking about like what's the right fit for me. And, learning to be a more data-driven decision maker has been really good for me.
Awesome. That's great. Yeah, I mean, being a rep or global account manager, you get a great lifestyle, you make good money, you got flexibility, family balance, and
Totally.
it can be pretty good. And sometimes you're a lot more valuable than some of the leadership. But anyway, here, so time flies when you're having fun. Tucker, maybe you can put up the 5-star things. We found out a week or so ago that in order to rank on podcasts, people need to go in under the Apple Podcast, scroll down to the bottom, for reviews and put in 5-star in a comment. So Tucker has that coming in here. And we have a question here from Jennifer. When making the leap from in-house operator to founder to investor, what made you want to make the jump? What challenges did you experience and what did you learn?
Great question, Jennifer. Hi, I know her. So I think it's funny, I tell people, if you would have told me 5 years ago, you're going to be working at a venture capital firm and a partner, I would have been like, oh my God, no. Like half the time I feel like people are,
No.
yeah, like, and I've certainly had folks on boards that I'm like, this isn't helpful advice. But I think being able to do it differently and actually be a resource to people has been helpful. What I would say is, so what made me want to make the jump is just staying, really continuing to think about where is my skill set and what am I passionate about. I had several folks, in my last couple say like, why don't you go be a CEO? Why don't you go be a COO at a big company? And I was like, well, because what I really like to do is understand the customer and coach people and drive revenue. Like that's actually what I like to do. And I don't want to be a founding CEO and have to go raise money and do a bunch of that stuff. That doesn't sound fun to me. So I think really, like you were just saying, Randy, on your, think about what you really want to be doing every day. For me, it was continuing to help earlier stage companies. So the way that I first did that was, on my own. I had a team and we were consulting, helping people do that. And then stage two just happened to be a fit for what for my background and what I was doing. I think the biggest challenge is you have to be okay with you don't know the answers, that you're still figuring things out. I think the hardest thing for me is I typically had a team, and then I was when I started my own company, I didn't at first, and I was both selling myself. I've usually only sold products, and then also trying to figure out how to implement. So I think you have to get used to somebody else isn't setting your goals for you. You're actually trying to figure those things out. And really thinking about what is the value prop for you or for your company. But those are, I think some people are much more prefer to, hey, I want to just be in-house because I want to be in-house on this. I'm in-house. I'm really good at doing these things. And that's great. If you feel like you are an entrepreneur, just be okay to be out there and you're learning too.
Absolutely great. So we're going to kind of do these next couple quick. So Tim Rodwanski is at a cool company called Convertive. So he's basically asking around about the different KPIs. So early on, Tim, you probably missed it, but she is going to share with us kind of the whole, I call it a platform, but kind of diagnostic around kind of KPIs and kind of what they do across the portfolio companies, which I think will be fantastic. So I think that kind of answers that question, right, Mandy?
Yep. I'll share that PowerPoint, Tim, and it has
it's
all
a great
of
reminder
to exactly what we ask them to report on to us each month.
They do that. Great. And then Ernie asked a couple of questions, but I think the poignant one would be really kind of how do you assess companies for product market fit?
Yeah, it's interesting because there's so many definitions out there of product market fit, as you guys probably know. So what we look at is first, we just look at the customers that you've acquired and their activity or usage. In a lot of cases, that company may not have enough. They may not have all, especially if it's an annual agreement, they may not have all renewed yet. So what we're looking at is how active they are. How do you determine what should they be doing in your product, and are they doing it? So does it look like they're going to renew? We do want to see more than 5. You've got the 5 friends and family. So we want to see that we're starting that you've sold enough. So typically for us, it's companies between 500 and $1 million in ARR, because there's enough customers where, okay, enough folks have bought and then they're using it. And so therefore the use case seems to be resonating. We also do talk to customers as part of our diligence, but first as we're looking at the data, those are the things we want to see. And then we do look at, and are you starting to see that you're starting to get some kind of like consistency and actually signing those folks. Um, so that's how we evaluate it.
Great. So Ernie and Tim, thank you so much. I'm going to try and wrap again, but we certainly love the questions. So Mandy, you've been awesome. We're going to take a break for a little bit for the holidays, and we're back January 4th with Bethany Meyer for episode number 105. She was a great operating executive and now does the board thing. She's chairman of the board at Box, on the board of Lamb Research, on the board of Sempra, on the board of Ambry, and a bunch of other companies too. So she's definitely impressive and will offer fantastic insight. So for those watching, thank you so much. Feel free to share. SalesBricks, thanks for your sponsorship. Mandy, you've been awesome, and best wishes for the holidays. Thanks so much.
You too, Randy. Have fun.